All right, I'd like to be respectful of everyone's time. So thank you so much for joining today's presentation. My name is Joyce Bradford. Today we are reviewing information about trust accounting. We are talking about 5 effective strategies to ensure that you are managing your trust accounts. So let's just jump right into it. Now you might be wondering who I am if you have not attended a TimeSolve webinar in the past. My name is Joyce Bradford. I'm licensed in North Carolina. I live right outside of Raleigh. So, proud of where I come from. You might pick up a little bit of Southern accent in my voice, especially if you're from outside of the region. If you're from this area, you might say you don't sound Southern at all. But I am truly from and have lived in North Carolina my entire life. I do love it. Traveled extensively, but this is definitely where I call home. I have been a practice management advisor. I've been a legal tech advisor. I have advised businesses on how to cooperate with or how to create sales strategies for their legal tech companies. So I've been around legal tech. I've been around lawyers since 2011 when I got into this world, and it's just sort of been all around this hub of legal technology. I absolutely love it. Right now, I work for a company called ProfitSolve, where I'm in enterprise sales, and I also work with our partner and consultant channel. So what I do is I help people find the best solution, either for their business or for their clients' businesses. So today, I am excited to talk to you about one of the most important aspects of your legal tech stack, and that is the tools you use to manage your trust account. There are things that are just nice to have, nice extra wonderful tools that make life easier, maybe make it easier to communicate with our clients, and TimeSolve has a ton of those things. But importantly, one of the things we have to make sure we're checking off the box when we engage in or decide to purchase a legal technology solution is, how is this going to affect my trust account recording or my trust account compliance? Those of you who are in this presentation have probably made the decision that you will use the IOLTA or trust account certification from your state bar. That's wonderful. There might be those of you who have decided that you aren't sure, or maybe haven't decided anything at all yet. I will tell you, it's not as complicated to use trust accounting tools as it used to be, because technology has made it easier. So let's talk about some of the tools that we want to talk about today. You know what, let's first establish what we need to do. So our objectives for today are to understand fundamental principles of trust accounting. All right, we're going to go through those pieces, and we're going to talk about what it means to have a trust account, what it means to actually have money that's owed to you that can then be deposited in your operating account, and when money needs to remain in your trust account. We're going to talk about 5 effective strategies for simplifying trust accounting. And we're going to discover practical techniques for maintaining compliance, minimizing errors, building stronger client relationships, all of those wonderful things. We're actually going to build those pieces directly into our 5 effective strategies. So I don't want you to sit here and say, okay, what do I need to do? And then separately, how do I need to do it? We're going to make this efficient, right? That's the name of the game here. So TimeSolve is simple time and billing. This presentation is simple strategies and how to implement them, right? So let's just get right into it. All right, key concepts that we need to understand, that we need to know regarding trust accounting: record keeping, commingling of funds, complete distribution, and reporting to the state bars. There are complexities with every single IOLTA account, no matter where you are in the United States, right? And presumably the majority of you in this webinar are from the US. However, if you are from the UK, if you are from Australia, if you are from Canada, many of the same principles are also going to apply to you. In fact, all of these 4 principles will apply to you. But there are, intricacies of your own state bar, your own law society that you need to be aware of. So today we're going to talk about our high level 30,000 foot architecture type of concepts, right? This is the framework that everything else is built upon. So number 1 is accurate record keeping. You cannot do anything else with your trust account unless and until you have accurate record keeping. This is the most essential concept. Understanding what money flows in, understanding what money flows out, and not just what comes in and what comes out, but also when it came in and when it went out, and what the matter that it is associated with, how that was impacted, right? Many of us have clients that prefer a client ledger for everything that they do, but folks, I will tell you, when it comes to trust account recording, you are in nearly every case hired for a specific matter, or maybe a specific series of matters, but there is a specific project that has terminal points, a beginning and an end, where you are working for a client. If you have trust that is coming in or flowing out for a client while you are working on that matter, it needs to be associated with that matter. It's just really important. You can run higher level client ledgers and see how much money an individual client has, but you need to make sure that it's being tied to a specific matter, because that is your sword and your shield when it comes to justifying the amount that you are charging your clients, and defending what you have done in front of your bar association or law society, right? Number two key concept here is commingling of funds. Now, this one has been a bit of a sticky wicket for those of us in legal tech and who have sold legal tech stacks for a very long time. There was a theory not too long ago in the pretty recent past where folks would charge their clients and they would like to get paid via credit cards. And what they would end up doing is they would make all of their deposits into their trust account. And then they would from there charge against their trust account any invoices that were currently due, right? But they would get a single deposit, both for trust replenishment and for invoices due. It would all go into trust. You can, but I'm telling you, you shouldn't. You should not do that. Never put money into trust that ultimately should not be in the trust. If there is a future date or a future event that will define that something shouldn't be in that trust account, okay, wonderful, fine. For now, that's where it needs to be. But if you receive a payment on an invoice and your invoice includes a trust replenishment request, a retainer replenishment request, a initial request for a retainer, that money should be separated out. Now, thankfully for you, thankfully for all of us, TimeSolve gives us the ability to do that. You never need to commingle your funds. You can have trust replenishments and you can have invoice payments that are paid to your trust account and your operating account separately. And you need to be mindful. Do not mingle those funds. The other piece of where we see some commingling is where bills are paid, right? Where a client pays an invoice and we use a non-legal specific payment tool. And I'm not going to call anyone out on here, but if you are using the same type of tool that you pay your dry cleaner with, or that you go to a restaurant and you pay with, it's not legal specific. And you are very likely getting into a situation where you are potentially commingling your funds, because what happens in those transactions is that credit card processing fee is very frequently deducted from the amount that's deposited into your account. And that, my friends, cannot happen. It cannot happen. Do not do that. Those credit card processing fees need to be paid from your operating account, the same way you would pay any other accounts payable. You cannot pay them from money that a client pays you. It is a separate bill and separate money that you owe. Your client can't pay that on your behalf. It cannot happen in that same transaction. Again, luckily for us, TimeSolve has solutions to fix this. There's an integrated payment processor in TimeSolve to prevent the commingling of funds. Third, the complete distribution of all of your funds. Again, this is about accurate record keeping. We know that our funds are balanced and reconciled, and we see how much money we have in there. You cannot hold money in trust. And if you are holding money in trust and you are unable to deliver it to your clients, you need to understand when that money is going to escheat back to the state that you are in. Right? That money will eventually need to be turned over to someone else. You don't get to have it by virtue of it sitting in your trust account for a long period of time. There's no abandonment of funds with trust accounts, right? You need to get that money back to your state. Your state auditor is going to have rules about that. Your bar association will have rules about that, about when the money will escheat to whatever agency it does in your state, but you absolutely need to turn it over. But before that, every single penny needs to be accounted for and distributed out, right? And I will warn you, just because there's some overflow in your accounting system by a couple of pennies where something didn't get rounded correctly, that doesn't mean that you get to add 2 additional cents to your invoices, right? You need to be mindful of that. And then, of course, reporting to state bars. Every state bar in the United States has a reporting requirement where they either require you to report voluntarily on a specific period of time, to report on demand when asked, or to go through a complete audit. And that will be a randomized audit that you are going to need to be able to complete. No matter which of those 3 buckets you happen to fall into, you need to be able to manage your trust accounts and run those reports and maintain their accuracy. And you're going to do that using the tools that are in TimeSolve. So let's talk about the 5 essential tips, right? You do this, you're going to be 100% covered, right? 20, 40, 60, 80, 100% covered. That's what we're looking for. I want you to automate every possible transaction that you can. I want you to do that reconciliation that we just mentioned. I want you to do that with technology. I want you to use multiple trust accounts where it is appropriate to do so. I want you to have default trust accounts for matters to eliminate some guesswork here. And I want you to be able to review on a regular basis, whether it's part of your reconciliation, a mandated report, whatever it happens to be. I want you to, in addition to that, be able to have eyes on your trust account on a regular basis. If you can do all of these things, you are going to be in wonderful health when your state bar comes knocking at your door. So number 1, let's talk about automating every transaction possible. I apologize. There's a lot of verbiage on this slide. I try not to do that, but I do think that it's important to define some of these things. One, I'd like for you to consider evergreen retainers. An evergreen retainer is an amount of money that you hold in trust for your client where you can either bill costs or fees against, or you say, this is the amount of money that I am owed, and I'm just going to say, this is my my true retainer that I am charging you every month, right? Either way, I want you to consider this for your clients that have ongoing matters that you are going to bill on an ongoing basis, that, monthly, quarterly bill, however you do that for clients, especially if they have hourly matters. This is a really good tool here. An evergreen retainer is very easy to set up in TimeSolve, and it allows you to always keep your clients' balances current. Now, again, one of the beautiful things about an evergreen retainer, especially within TimeSolve, is we can turn on automatic replenishments for this. So your client, when they get below that balance, will receive a notification in your standard invoicing period saying your retainer balance is low. This is what you need to bring it back up to current, or the agreed upon amount, and your client will receive all of the necessary notification. And if they have a billing methodology on file with you, which they should, either a credit card or a checking account, you can actually bill directly from their account to deposit into your retainer, into your trust. It's a great plan. It makes sure that you always have the money that's necessary to bill. You're never having to worry about where your money is going to come from or chasing down clients for bills. And it's automated. It is truly an automated process within TimeSolve, and everyone stays happier, right? Your clients are never surprised by how much they owe. They know what they need to keep in that retainer. You're never surprised by a client not paying you because you are billing against a retainer that's already on file. It's easy. It's automated. The money's deposited into your trust account. That money is there sort of as to be billed against in the future. So it's not money for services that have been rendered, but it will be for services that will be rendered in the future. So when you actually do charge against it, you have an invoice to back it up. So that the money that you're pulling from your trust and putting into your operating account, when you are paying those invoices from that money in trust, 100% defensible. Keeps you in really, really good shape and keeps your records clean. All right, number 2, recurring billing. For those folks who don't want to necessarily have an evergreen retainer, but you do need to make sure that you're getting paid on a regular basis, you can always generate your invoices, send them to your client, and then have say that, I'm going to bill you this set amount every single month. It's kind of like a flat fee agreement, right? Or you can make your recurring billing based on the amount of invoice or the amount of the invoice for that month. right? This is very similar to the evergreen retainer, except instead of money being deposited into trust, it's money that is deposited into your operating account. Again, we are putting money in the correct place. If you are getting paid after your invoice, it is a good idea to set up recurring billing to ensure that that money is never accidentally deposited into trust, because it is money that is owed to you for services that have been rendered, money that is due now. That money should never be in trust. It should always be in operating. Okay. So set up recurring billing if that is how you choose to get paid from your clients. If you're invoicing and then getting the money, recurring billing. If you're getting the money to bill against as you go, evergreen retainers. But understand what you're doing and know that TimeSolve has the tools necessary for you to make the right choices to keep your trust account exceptionally just squeaky, clean, pristine. That's what we're going for. Number 3, payment plans. Again, for those folks who have invoices that they are collecting after services that have been rendered, or money that they're collecting after services have been rendered, you need to look at something like a payment plan for anyone who has an overdue invoice, that money that's in accounts receivable that has been there for 30, 60, 90, maybe even 180 days, right? Now, why am I talking about payment plans when we're talking about trust accounting? The same reason we talked about recurring billing. We need to make sure that when money comes to us, it is deposited into the correct account. I want to have a credit card payment on file, right? So let's take 2 steps back. I've done some work for Jimmy. Jimmy hasn't paid me. Jimmy can't pay me the $5,000 that he owes me. He just doesn't have it. Jimmy can pay me $150 a month. Great. I'm going to tell Jimmy, I'm going to bill you $150 a month. I'm going to put your credit card on file and we're going to bill you until your balance is 0. Easy peasy. Done. What Jimmy's going to get is every month a notification that his credit card will be charged and the money will be taken from his credit card and deposited into your account, your operating account, because that is money that's absolutely owed to you. Now, again, if you have one of those sort of generic credit card tools, that money is quite possibly going into your trust account. That is not what we want. We want it going into the right place. If it should be in operating, it needs to be there. It should never be in operating if it needs to be in trust, right? That's our big rule, right? That's why the majority of people who had these generic tools said, I'm going to default everything to go into trust, because they would rather it go into trust first rather than having to move things out of operating, because if you're going to break the rules, that's the better way to do it. But we want to avoid that altogether, right? Money should be in the correct spot from jump, right? And number 4 is a dashboard. Now, how are we going to automate a dashboard? There are several ways to do this within TimeSolve to see exactly what you need with your client. You can go into your matters and look at each individual matter dashboard, see where this client stands right now. But you also have financial matters or financial dashboards within TimeSolve. And they are just part of the standard TimeSolve product where you can see exactly how much money you have in trust. Once a month, once a day, maybe at 12:30 or 2:15 in the afternoon, you have a reminder on your calendar. I'm going to go look at that. You do not have to reconcile every day, but I want you to take a look at it. Just look at that financial dashboard and say, is that amount vastly different than it was yesterday? I just need to be on the lookout for fraud, for anything that would raise a red flag for me if I'm expecting something to hit that trust account and it hasn't. I need to understand. We have all, from our state bars, received so many warnings about email scams, where someone will spoof an email where they have fake wire transfer instructions, right, that are different than what we've told our clients, right? So let's avoid that. Let's get rid of wire transfers anyway. Let's use a true online payment system where things are correct and backed up, and we know that it's the correct link, right? I want to do that. But then beyond that, I want to just have an eye. I want to be on the lookout for things that would signal something's wrong, right? And I want to look at that dashboard every single day. So again, I'm trying to eliminate human error. I'm trying to be on the lookout for red flags, potential fraud. I'm going to automate everything I possibly can. And I'm going to use the system to get the data in the easiest possible way without a tremendous amount of legwork for me. Right. All right. The next thing that I want to talk about is reconciliation with tech. Now, most of us, I believe all of us from all 50 states, but let's just say most to keep it accurate here, our state bars require 3-way reconciliation. Now, all of us probably know what that is, but I would like to review it briefly here anyway. In a three-way reconciliation, you need to review your client's ledger against your book balance, against your bank balance, right? Now, how do we do that with something like TimeSolve? And honestly, it is just incredibly easy. One, you have the client ledger within TimeSolve. You can pull this up, and it's a full report of all your trust transactions from a given date. So you'll see the date of your statement, and you'll see the date that the deposits hit your actual account. You'll be able to tell when a transaction was started or when it was actually deposited. And you'll be able to say, okay, this is my client ledger. I'm going to go to my book balance and say, okay, in QuickBooks, because I've synced my TimeSolve account with QuickBooks, are all of these same transactions there? Yes or no? Boom. I've reconciled those two pieces. I'm going to go to my bank and I'm going to reconcile it there. Now, luckily for you, because you've got this great integration with QuickBooks, you're going to be able to pull your bank feed into QuickBooks so you can reconcile right there without having to go to 3 separate pieces of software, right? Importantly, you're going to look at the amount that your client has noted. You want everything to balance directly up into TimeSolve. Now, because this is a technology-driven tool, it is technology, right? We know that those balances, everything that's here is going to balance up to TimeSolve. So I can look at my top level TimeSolve numbers. Do they match the numbers that I have in QuickBooks? Does that top level QuickBooks number match my bank balance? And do a very quick high level reconciliation that way. You do need to go through and reconcile each individual transaction, but those tools are available to you without a lot of effort on your part, because TimeSolve is built to be a legal specific tool that works the way that you work, right? So use TimeSolve, reconcile your accounts, make sure that all of your balances match up, use the process that's required by your state bar. But I mean, it really is just the 3-way, just about everywhere you go. And you will be able to very easily see if your balances match or not, right? If you'll be able to very easily tell, have I recorded all of my costs? Have I recorded all of my fees? Is something missing from one place or the other? And through the reconciliation tools, and QuickBooks has some wonderful tools for this, through the reconciliation tools, you'll be able to just match your transactions. And you can even just limit yourself to the unmatched transactions before you go look at your total. And if you are doing this on a regular basis, even just on a weekly basis, the reconciliation process is so fast. It's so easy. Is it as much fun as arguing in front of a jury in court? Maybe not, if you're into that, right? But it is something that's necessary, and TimeSolve has made it exceptionally easy to get it done and to get it done correctly. All right. Another thing that I mentioned here was multiple trust accounts. Now, why would you need multiple trust accounts? Well, if you were in a larger firm, you absolutely understand this, right? Maybe you have trust accounts for different locations, or a variety of reasons. People just partnered up and had multiple trust accounts. Your underlying account for firms that have merged just haven't been fully folded into your main trust account yet, whatever it happens to be. But TimeSolve does support multiple trust accounts. For most of us in a solo or a small firm, or even in a mid-sized firm, if there are multiple attorneys, there's a really good chance that you have multiple trust accounts. I also note that there are a lot of attorneys who use multiple transaction types to define if they want a trust account differentiation. So there are definitely practices out there who have a single ongoing matter with a high number of trust account transactions over the course of several months or even several years for a specific client or a specific subset of clients, and they'll bill costs against one trust account and fees against another trust account. You can absolutely do that if you are pulling that money in first and then creating your invoices and billing your invoices against trust. 100%. You can absolutely do that. And that works for some people. It's not my favorite way to do it. And in fact, I think the technology now is so much better than it used to be, that that's not necessary nearly as frequently as it used to be, but it is there. But I definitely see trust accounts for specific practice areas. And as each practice area is responsible for its own little book of business, this makes sense in a lot of firms, especially if you have folks in real property who are holding high dollar value trust accounts. Maybe you don't want to be in a situation where that could potentially impact the rest of the firm if you encounter a nefarious actor of some sort, right? So know that you can have multiple trust accounts. The default when you add anything to TimeSolve will be trust, but you can rename them to give yourself some clarity on that. And again, when you set up your payments within TimeSolve, you'll have the ability to add multiple trust accounts there too, just to make it really easy to track what you're doing, to ensure that things are deposited to the correct account, not just operating in trust, but to the correct trust account itself. And then of course, this is sort of different than the previous slide, but this is my preferred way of doing it. And it is the default trust account. So if you have multiple practice areas, that is an easily justifiable reason to have multiple trust accounts. But within those, for each matter type, you should at least have a default trust account. A default trust account is used when the majority of your matters will utilize the same account for all of your IOLTA defined transactions, right? Pretty straightforward. What you should do is have that default. If you're not sure which account it should go to, use your default. Have a primary one for your law office, for your specific location, for your specific practice area. Make your life easy. Where possible, don't have 17 different trust accounts. Unless there's a really, really good reason to do that, don't have that because it will require additional reconciliation time. It will require additional eyes on that. You're going to have to pay your bookkeeper, if it's an external bookkeeper, or your CPA more, because they're spending more time on it, right? So it's going to provide you with some additional security. It's also going to make it easier for you to go through your reconciliation process at the end of the month. All right. The last thing I want to talk to you about is periodic reviews. You really need to do this. You need to review things daily. Now, the easiest way to do this is just to look at the dashboard. What am I expecting to come in? What am I expecting to go out? Does that number just look right? Maybe I'm not truly reconciling every day, but I have eyes on that number every single day. I also want to create a workflow for my reconciliation. Every single time I go through my reconciliation process, I want to have a workflow. Now, why do I want to do this? Well, if I have multiple trust accounts, I need to make sure that all of my trust accounts are listed. I also need to make sure that no matter who is reconciling in my firm, whether it's me or another staff member, everyone is doing things the exact same way. It is a repeatable process that I can replicate over and over and over again. That means I'm going to be able to find flaws in it. That means I'm going to be able to train my staff in it. That means I'm going to be able to hold everyone accountable. Now, maybe it's just you in your law office. Doesn't matter. You're going to grow. It's going to happen. So have faith in that process, write down your reconciliation process, hold yourself accountable to it. And that way you can be sure that you're not going to miss anything. And then of course, accountability, having that process, understanding what you were doing, going through that workflow of your reconciliation time and time again, allows you to keep a log of what you've done, how much time you've spent on something, but it also gives accountability to your CPA and your bookkeeper. They need to go back and check your work. It's just important that they do that, review it. That's their job to do that. But if you've got a log and you've been doing this on a regular basis, it won't take them much time at all. But where possible, have someone check your work. That's why you hire these outside folks. And it's something you absolutely should do. If you don't have an outside bookkeeper or an outside CPA who's willing to do that, reach out to the TimeSolve team and we'll be happy to connect you with someone that would love to support you in your business. At the end of the day, this is a business. You do rely on professionals to do things correctly and to support you. And we are here to help you every single step of the way. So if you don't currently have a TimeSolve account, please go to timesolve.com, start a trial. It is a free trial. We will reach out to you. The team will say, hey, how can we help? How can we help you get some data in here to make a good choice about your firm and what you're using? You can call us. You can email us at support@timesolve.com. You can use the chat tools on our website, but ultimately we would just love to assist you. All right. If you have attended these webinars with me before, you know I like to keep them less than 30 minutes. So I'm going to stop recording. If you have questions, please hang out. I'll be happy to answer those or to direct you to the correct resource. But this webinar will be available online on demand to anyone who either had to step out or step away or who missed it and who had registered for it. So the webinar's not ending, but I am going to stop sharing. I am going to stop recording. So for those of us who are viewing this in the future, thank you so much. And for those of us who are still with us, please hang out.